Hello and welcome. It is the 9th day of May 2019. My name is Derek, and this is the Money Charts channel, all bets, trades of the like. Well, that is within each's own risk and their own reward. Well, then, Bitcoin. We've had a continuation move looking towards a play to the 63 and a half level. We had a lot of resistance in starting first here on the 3rd of April. That high came in at, let's get right to it, 5,345. And several days later, up to a high of 54.88, so close to 55. And then it makes this move in here a little bit higher again, 56.50. So three times within this area, and the amount of time from April 3rd to where it started to break from the lows in here, April 30th, well, basically it's almost that the entire month of April. And now since breaking this high, I mean, this was just barely higher than this. This was barely higher than this. And even this was barely higher, but it didn't have any deep correction because it didn't even make it to the 18. Continuing to move higher. So point A high, barely higher. Point A high, barely higher. I guess you can call it a point B high in a way, but it was again 56. Now it's been above 6,000. It is above 6,000. Today's current price high is 6,098. The low is 5,934. In viewing such on the 1 hour time frame, put this to auto so we can see more towards what is going on. There was the last breakout move. It occurred at 7 p.m. Eastern time, and if you look at the intraday low, well, I mean, just before that low, because the day technically started on the 20-hour time frame. So the period before the low, it had a more significant one that again came in at a little under 58 and a half. So after that low, within that period, the next and the one following is where it had a very good move. So 1 hour plus the allocated time from the low here, plus the allocated time it took to get to this high, which we can figure out better by using like a 5 minute time frame. And then going back and seeing, okay, well, this was that key low that happened at 1925, and it started right at 7:30. We can see is when it started, 1930. I subtract 12 from that. Plus, I got to know this pretty early because when you were following hockey games in Quebec and the Montreal time, they were forced. They used this time. So 1900 hours, 1930, and 20 hours. Those are when hockey games started back then. And I actually watched and listened too, I guess, to some of the Montreal Canadian games en français. And when they scored, they would say "à la bout." Back then, they did anyway. All right, so this time ended at 21:10. So the allocated time for this was 1 hour and like 40 minutes to make this move. And then since then, okay, we established some support here at 60.16. And I guess I can put a temporary line in here and just remove it after the fact. So this is where the support was established, right in here. Market moves on. It comes down to it, pierces extra below, but comes right quickly back to it again. And this time it has a break below, but does it hold and stay below? Right now on the 5 minute, it did because it resisted this fact and significantly. Now are we going to resist the 60.1 60.16? Yes, maybe. We have through time, not through price really. And that's where it stands right now. Big short term test at this number. But and I didn't even know. I wasn't even I didn't plan this before or look at this beforehand. I just thought, heck, let's do that, and it happened to be exactly where we are now. But I want to focus mostly on the more again longer term time frame as the daily chart has again lifting off from here has continued its move. Not quite coming to the 18, and right now the 18 average of highs and lows are both rising steadily. The highs is in at 56.86, the lows, and they are in at 5,450. So that's where that comes into play. The 18 average of highs on the weekly term time frame right now is in at 4,880, and it didn't need a price correction on here. It didn't go deep enough to go to the 18 lows. In fact, there was hardly any down action here at all. And it wasn't long enough to meet up with this, for it only corrected sideways for about 4 periods. Pretty strong action. That says a lot when the average person's losing here. And I'm going to switch this to the Bitstamp exchange, but before I do, I want to take a little quick gander at the volume here. Okay, so volume's okay. Then it picks up as it should on the highs, and then it goes down, which is a little bit better than this volume. And we had a little pickup here on this decline, and this volume here looks relatively normal. Let's move this to Bitstamp, which is a little bit different. And surprising that it is, because I was expecting it to be a lot more. Now, the data that I got, I just put my formulas in. What I'd like to do on here is insert an indicator. It says I can do it, but I don't know how to use it. VWAP. The VWAP stands for the volume weighted average price. And here we says unsupported resolution. Well, when I'm asking to do a VWAP, what I need to know is from where. Do I want to do it from this high, this low, just whatever random day? And how it calculates it. Well, I'll show you via that of a spreadsheet. And I got the data starting back at May 11th, 2015. So 4 years worth of data. And we have the open, the high, the low, the close, the volume. That's what I need. The volume current, which is the dollar amount, and then the weighted price. So what I did was I scrolled down to the lowest price I could find, which was 198. Since 198 low, we can see here, this was the lowest price on April or August the 25th. So here's the calculations. This here is the average of the high, the low, and the close. This here is the average price for that day. Multiply the amount of this volume here. Maybe I did this wrong. If you did, let me know. It's been actually about, what year are we in, 2019? I'm guessing it's probably been about 8 years since I've done this calculation. 7, 8 years. I used to do this in the stock market because I've never been able to figure out how to run a VWAP on any type of site that I've run on. But I actually had it done pretty well back in stock market days. So anyway, this is the sum of all of these numbers in here. That's what this is. And this is the sum of the volume in total. So I take the sum of this divided by the sum of the volume, and that gets me right here, which is my moving average, or my volume weighted average price. And I just pasted this all the way down to that of the price point. And from that point on, what I did is I got a spreadsheet in here. Well, I got a spreadsheet. I got a chart, rather, which pretty much shows it. Let me just make it a bit bigger to see. There we have it. Why are you doing this to me? Just wanted to move it a little bit. And a little bit more. Okay, so from the low here, the volume average price was rising, and then it goes up this exponential curve. Would that have been correct within the volume? Maybe. It's flatlined pretty much here at around the 8,000 mark, and the volume weighted average price from this high in here, it says, is around 9,000. So in this next leg higher from where we stand, and that's a really interesting middle point. as that is between Fibonacci and closer to the 10 number, I guess. But the next key Fibonacci number, and I'm just trying to remember what those numbers were, which is pretty interesting. But let me just get those numbers again. Low is about 3120, high is about 20,000. 12,901, and then we have the 9836 here, the 9836. So it coincides, appears below where the next 61.8%, which is the big Fibonacci number as it is anyway, from this low to this high. But take this for what it's worth, and I'm done with the VWAP now. I'll go ahead and delete this, and you know what? Let's just take a look at more other moving averages. Let's go in here. Let's go to an indicator. I'm just going to use a simple moving average for this one. I usually use the weighted, and exponential's fine. I'm a weighted fan, but I'm going to use moving average basic on this. And there we have it here. So what I want to do is more of a longer term. So let's see what a 200 period moving average would look like. And let's change its color, because I don't like that color. Maybe if even I was gonna say maybe if it was a bit bolder, larger, but then I just know it would even be worse. Okay, what color do we use here? We could use black, I guess. Can we thicken it up just a little bit? Yep. Okay, so there we have it. So the 200 week moving average. Well, that's where support ended up being found, much better than, of course, where the Fibonacci was. Fibonacci was well, I gotta redo it again. What was the key numbers? It was trying to remember what the key numbers were. 179 low. Well, it says 33. What was 3101? On 152 low, it was 31. When I calculate a little under. It was 3,000 and change when I calculated. So maybe the low is even deeper than that. Well, let's see what the low is here. 152.4. And I'm sure that VWAP from that point there wouldn't be too much lower than the one starting at the 300, given just because of how much bigger the volume has been. Okay, 3,100 was the significant Fibonacci. Why was I even checking up on all of that? Because of the 200 period moving average. That's the reason why. Okay, so finding support there on the weekly, on the daily, didn't find resistance there. Okay. So that was just another indication and stating that, hey, wait a second, why are we not finding resistance? Now, I had resistance here closer to this 48, which became more of an accurate number, but here nor there, or it's like just a micro fraction bit of extra analysis. But this isn't even starting, is it even flattening out? It's going down. Well, how long ago was 200 days? 200 days. To get exactly 200 weekdays before now, you actually need to count 280 total days, including this means that 200 weekdays. I don't care about weekdays. See, in cryptocurrency, that is just crazy. That is crazy. Well, I guess I have to do it some weird way. So I have to add 20 from that. So we're looking at October. Okay, so October at 5. October 21st. And looking at October 21st, yeah, see, October, that's back in here. That's back at prices at 64.23. So technically speaking, if it's unable to get to that key Fibonacci point, this is going to continue to decline, albeit when prices are close to it at a very small rate of descent. And then interestingly, uh, how many days since November 13? Let's go back to that now. So in 23 days or so from now, which would take us 23 plus 9, that's 32. So right around the start of June, right around the start of June, this thing is just going to start to go rise at a nice little rate of ascent, only because old historical data goes through change. Because in a simple moving average, what you're doing is you are you're taking removing one day from another. So you're going to replace in your average the current close with what it was like 200 or 201 days ago. So right now we're replacing 6,000 with like 63 or 64. So that's why it keeps declining. But when you start to replace it with here, 5,500, and you're replacing that with 61 or whatever, it will go up. And then it goes down here to 47, and then to 43, and then to the 37s, and so on. And then, as long as price is holding well and good, then the rising average has no choice but to go up. If we take a look at this moving average and say, well, before we do, I don't care about the short term. I was gonna say before we do it, let's just take a look at other time frames. But I'm really not too curious anymore. So let's put in the exponential 200 and see what we get on that. And see, this one's starting to rise. So it's done a little bit of a better job in fixing that situation. It was declining down towards this and up in here. And I don't think I can make this front weighted in here. No, I can't. So let me just see what a front weighted moving average is. I unfortunately, well, you know what? I could quickly edit this and then just put it back. So on the front weighted moving average, we can see that the exponential has done a better job of that of more towards the current price than the front weighted has. And the front weighted has done a better job towards that of the regular one. And such, they both started to rise as it had that same indication where you weren't where it got above it and didn't go down. Well, in both cases here, moving averages immediately went from a slower rate of decline, and especially on this front, a rate of decline to a rate of ascent. So that is really important. That when you use those, you just get better data that way. Overall, moving averages are that of a lagging indicator. And when I'm using it here for the 18, it is merely for, as we see all the time, just to see that band as it is. Now, in using, say, an 18 or the average like this exponential, it well, you can take a look at it. I have in the past too, but when I did before, I enjoyed the weighted more. If you put this in, say, a different period, like say an 80 period moving average, how would it look? Well, let's take a look. You would still have those bands moving up and down in the correctionary stages. It obviously uh, takes a lot more to come back to it. And within it, does this, I mean, you can see here, there's as we're looking at this, prices are well extended over it, so it shows the good move within it. It does show correctionary moves within it, but more of the deeper ones, not the quicker ones, the ones that I'm more looking towards, which is why I pick a shorter term number. And then within the reversal here, okay, market's going down. Okay, band flattening out here, establishing resistance, coming back, and then it breaks it right here. Well, we'll see how it does in all the time frames that way. Weekly chart. There's a spot where it goes below it. Okay, so what do we see on this one to show that it reversed the trend? Well, at this point in here, uh, it's going up to this band. Okay, it's got above it. That's enough to flatten the band out. Okay, we've also established resistance here back to the band. Okay, so now we need to see a clear break above 500. Okay, not quite there. Continuation of support, maybe not quite on this level. Now the strengthening of this level just made it that much larger, and there it was. And of course, the market had its big gain, continuously supported, now resisting it at this point, going down and having its retest of this level. Let's take a look at this on the 4 hour. And they can still work. And if you prefer this, you can go ahead and use such an ideal. Now, how would this work, say, even a larger number? I've used 18 all the time. Using 80 here, how would, say, a 200 average look? If we put a very long, long, long reaction from it. And if we take a look at it from the monthly chart, it's so long that it hasn't even started on here. There hasn't been 200 months yet. On the weekly chart, what do we see within this? Okay, so from the bottom areas, the band was just pretty much flat. So we're still correcting this move. So I guess for resumption of trend, resistance established, pretty much at the same ordeal at this 500 level, getting above it now. And from this move here, it's really band flattening out. For a long time, it was holding and staying below the 18 average of lows. But this move in here not only got it up to the highs in this case, but starting to make a break above it, which means do we get resumption of trend here? If we start to see momentum above it, that's how I'd be looking at it. On the daily chart, let's just take a look at a whole bunch of days and see how they react to each other this way. So during the amazing up run, supporting it throughout the entire duration, the only time it ever went below it was during the summer of 2016 lows. Maybe it might have microscopically done it here. I don't think so there. But amongst it, it had the level of resistance oftentimes and so on and so forth. The 4 hour chart, that's what we're getting. Of course, this was that big level of resistance at 41. And I don't think you needed this 18 lows in here, but you do see how it was the area where it ended up finding its support over and over and over again after having this fantastic move higher. And then after this move in here, it didn't support it here, but it did support it on this level here and has lifted off from that point. And just for something to do, let's take a look at like the 15-minute time frame showing the run of the last couple of weeks. And from this last point where it sustained a decent, strong amount of time below the 18 lows, because the only other time it's been below it is here, here, and here. That's it. So therefore, there's your... okay, I didn't want to do that. I wanted to draw a drawing tool there. This is your sideways consolidation that established its breakout in here. Never quite came back to it and even really didn't here. But within this move, you can see within it how it held it well. Resisting or resistance levels continuously increasing until it had its phenomenal gain. And then piercing below, piercing above. Piercing below, seeing choppiness, piercing above. But in this piercing above, it did at least make a higher high. And amongst doing it, it did support in this area and had a lot of time just in here. And then below the line, but again, below the line is higher low from what really was a matching one before. So that eliminates, it's still choppy, but choppiness to a bullish level. And then from that last point that it left the 18 average of lows, well, it got above the highs here. No, not to a great move, but then it comes back down to the 200 lows. And I was about to say the 18 lows there, but by no means is that the case. And then now another spectacular gain. So it can't be choppy anymore, not since this stayed above the low. So that's another reason why I like the 18 bands. It helps me determine choppy markets as well, because a choppy market is one that goes above and below. But I think when you use a lot of candles, then I think you'd want to use a larger number. But if you're like me, and I like to look at each individual, and I guess you suppose you still could look at it this way, but yeah, it looks. I like. I have a hard time myself. Uh, Still playing within it because I see this as a deep level pullback, and when I got the 18, I can see on a period by period level this way. Okay, so we got this up move, shorter term correction. Now this breakout, of course, that's on that works towards the short term. I also can see in here signs of original market momentum losing strength. See it's going up. I hate saying that because obviously if you can watch this, you can see there's where it starts to go sideways, starting to decline, resisting in that area. And again, that's why I like to use the more shorter term. And this can tell you here, okay, this is where the bearish signals are for this time frame. And we've had that one small leg lower, a little bit lower from where that bearish signal is. It's had one bounce to it, but it's so far successfully on a bearish side, correcting this on a resistance area level, but it hasn't completed it because it's been supporting this 18 lows. Once you start to see weakness down towards here, okay, that's continuation of this very new bear market, and on this time frame, of course. And I'd be looking for it to play a move towards the lower end. And if because I see this resistance established, I'm always looking at the next previous key levels. I can see that getting above this short term. I'm looking at a period by period basis. That getting above it would be that play. But it's interesting now that I'm thinking that I can almost look at any chart because when I'm looking at like a line chart somewhere else or anything that doesn't have it, I can almost visualize where the 18s would be. So I kind of wonder maybe just for something to do, switch it up with time, and because I know, and I don't know, that's just something I might do. Maybe I might change it over. I can't put them both at the same time because the most I'm allowed to have is three moving averages, so I can't have two bands. But whatever. Thank you for tuning in and have yourself a great day. Bye bye.